Hello, everyone, and welcome. My name is Philip Palumbo, and I am the host of the Palumbo podcast, where we interview some of the most successful founders of businesses to learn how they got to the top. I am also CEO and founder of Palumbo Wealth Management. We're a private boutique wealth management firm with a mission to help founders successfully exit their business. Today, we are fortunate enough to have with us Dr. Eric Cole, who's a renowned cybersecurity expert, entrepreneur, and best-selling author with over 30 years of experience in the industry. He has also exited 3 successful businesses for 7 and 8-figure sales. He is known for his work in advanced cybersecurity and his dedication to making the digital world a safer place. Dr. Cole has a unique background that spans working as a professional hacker for the CIA to advising some of the world's top companies. As America's cybersecurity czar, Dr. Cole's life mission is clear: to make cyberspace a safe place to live, work, and do business. So, Eric, thanks so much for your time today. Appreciate you being on my show.
Pleasure to be here.
All right, good. So first, when you had told me you had 3 successful exits of a business, first of all, that's not easy. And second of all, congratulations.
Thank you.
So after 3 successful exits, what made you start another business?
It's really now about contribution and giving back, because it's one of those things where I don't need to work. So I really resonated with your intro where you're sort of making what I call work optional. But it's one of those things. After my last exit, I sort of took a little time off and was home. And what I realized is I was driving everyone around me crazy and insane because I don't do good with free time. And I'm all about problem solving. So I'm sitting there with my kids and spouse and everyone else trying to solve their problems. And they're like, you either need to go back to work or we're going to kick you out of the house, right? Because you're driving us crazy. So I'm at the point now, I don't like calling it work, because to me, work sounds like work, right? I'm just really having fun. And to me, it's really about contribution. And now it's about really giving back. So my goal is to actually do at least 3 more exits and be worth $100 million. I do 15-year goals in 15 years. And the reason is my life mission is to help people and kids. So one of my big things is there's a lot of kids that need organ transplants. And very often they're in small towns and they can't get to the big cities quick enough. And there's only about an 8-hour window. And some of these kids are losing their life just because of transportation. So I want to have a fleet of G6s where I can basically, when somebody needs a transplant, I can get them a jet in an hour, get them to a hospital anywhere in the country, and basically start saving kids' lives. So to me, in order to do that, I need a lot more money than what I need to support Eric and his family.
Wow, Eric, that's really terrific. That is fascinating. Good for you. People don't realize that, successful people, it's not all about just making so much money that we can do all these incredible things. But it's really the mission that many of us have, for why we want to be worth a certain amount. And for your mission, that's really amazing. So congratulations. Good for you. That's really, really terrific to hear.
One of the things I always tell people is, because you always have the phrase, money can't buy happiness and all this other stuff. And my response to them is, if you don't think money can buy happiness, you haven't given enough of it away. Do you know how happy it makes me when I'm giving money to other people that are less fortunate and helping or changing their lives? It puts a huge smile on my face. So if you don't think money can buy happiness, you're not doing it in the right way and you're not giving enough away.
You're 100% right. I've heard that time and time again. I've talked to many people that have said that. So good for you, Eric. It's really exciting to have you on. So appreciate you being here. So Eric, so let me ask you the biggest thing in regards to planning an exit, right? I always talk seldom about owners of a business really understanding are you at what I call best in class in terms of valuation? When you thought about valuation of your business prior to exiting, is this something you thought about?
To be honest, when I start a business and grow a business, all I care about is valuation. To me, revenue is secondary. I have friends that basically have companies that were making no money, but because their intellectual property and their patents and their technology was so valuable, they sold for 80 or $100 million. But my sweet spot is I like to build a company to about 5 to 8 million because it proves it's viable. You have customers, you prove it's a viable market, but I focus so much money putting back in on intellectual property, trade secrets. To me, sort of the big things of valuation is you need to have subscription. You need to have reoccurring revenue. Because if you only have one-time revenue where you're selling products and you only have a pipeline of 3 or 4 months, your valuation is super low. But if I go in and I say, listen, I have subscription and it's basically generating $2 million a year guaranteed for the next 3 years because I have 3 year subscription. Basically, the more you subscribe, the more I discount. So I try to get 3 or 5 year subscriptions for all my services. That's going to be worth a whole lot more. Then how do you protect your intellectual property to make sure other people can't get into your space? So I'm huge on patents, filing patents. I know a lot of people like, oh, patents aren't worth anything. They're worth a ton. They're worth a ton. And then focusing on reputation and branding of really getting known in the space and having really good referenceable clients that can actually speak on your behalf, and then being very visible in the space. I'm huge on keynotes, podcasts, where when you search on my name, I'm everywhere. So I'm a well sought after brand. So they're not just buying the technology, they're buying a name in the industry that can help expand and help their business. So to me, it's all about valuation, number one, and then revenue is a secondary distance.
That's terrific. So when it comes to branding and marketing, right? So you built obviously three successful businesses. And were all of those businesses in the cybersecurity space?
Yes. So I'm a big fan of sticking in your swim lane. Like I did a little investment in some other areas outside, like some friends convinced me to invest in some restaurants and some other areas. Worst investments on the planet because I don't know the space. And I know how to eat at a restaurant, but I know nothing about running a restaurant. So I really can't advise or monitor it. So I'm a big fan of get into a domain that you know and can grow, like cybersecurity, and then stick to all of your investments and all your companies and all your growth in domains that you know, love, and can enhance.
So Eric, I'm big on total addressable market. So any investments that we ever make with public stocks or even on the private market, and one of the most important things is if you're investing in or thinking about investing in a public company that has very low total addressable market, then the CAGR or the compounded growth for that particular industry is going to be very low. It's going to be very difficult for that company to grow the way we like companies to grow. In the cybersecurity space, the TAM on that business must be tremendous and parabolic. Would you agree with that?
Absolutely. I mean, it's huge, and this is where all your big companies from Google, Microsoft, IBM, Oracle are all in the acquisition space with cyber. They don't want to build cyber; it moves too quick and too fast. So it's one of those where you want to get in early. And what my goal is, I'm always looking 5 to 7 years out, saying what is going to be the new disruptive technology in cybersecurity in 5 to 7 years, and then my goal is to be one of the top five because you don't need to be number one, but I know the top five are going to get bought because you have that's just a guarantee in cybersecurity. And this in a lot of these areas, when you're talking about data privacy and tying it with AI, I mean, you're talking hundreds of billions of dollars of a market cap. In some cases, I mean, we're talking the merging of AI and cybersecurity. The last I saw is that's like a $1.2 trillion investment cap over the next 5 years. I want to get in on that because guess what? Even 2 or 3% of that is going to be huge. So I'm really about early stage startups or really starting my own company and then growing it as much as I can without taking on funding because I see a lot of companies, you get great ideas and oh, I need 20 or 30 million or 50 million. And the next thing you know, the owner has 5% of the company. And that's not really going to give you the return. So I really try to get as far as I can without funding. Two of the three companies I grew and sold without any funding because once you
Wow.
do it once or twice, my philosophy is the Elon Musk is take your money and invest it back in. Like if you look at Elon Musk, most of his money is tied up in Tesla, SpaceX, and others. Like he doesn't have a ton of liquidity because he invests it all in the companies, which is brilliant. So to me, your first and second company shouldn't be about making you money. It should be reinvesting. And then to me, your third and fourth company is where you build your generational wealth that you invest back in yourself and in giving to third parties.
Oh, that's phenomenal, Eric. I say it all the time. When you think about all of us who have businesses, we have a certain amount of profitability, and you have to make a decision when you have those profits. Do I take the profits and I invest in real estate or a portfolio of stocks, or do I reinvest back into the business? And what people, I think, sometimes forget is that when you reinvest back into the business, it's a tremendous tax benefit of doing that, number one. So if you decide to take the money out of your business and invest in stocks or real estate, you have to pay taxes, which is about 40%. and then you have to invest and get a return that's going to make up for you paying those taxes. So if I'm not paying the taxes, reinvesting it back into business, and if those returns on investment capital that I'm reinvesting in, if even if I'm getting 10%, which I'm not, I mean, and you're probably didn't either, if you're probably getting 15, 20% return on that,
Exactly.
plus saving the money on taxes, you can never make that up by investing in any real estate or any stock out there. Would you agree with that?
I absolutely agree with that. And sort of one of my rules is you shouldn't have high-end sports cars. You shouldn't have $1 million homes. You shouldn't have vacation homes until you're on your at least second or third exit. Because to me, I see these guys, they're running companies maybe $1 or $2 million, and they're buying Ferraris, Lamborghinis, multi-million-dollar homes. And then you see the business suffer or go out of business, or they get acquired for pennies on the dollar because they were too busy buying toys instead of investing back. So yeah, I'm a big fan is if you're, and once again, people get mad at me when saying this, but if you're driving high-end sports cars or have high-end houses in your 30s or your 20s, you're doing it wrong. You're not
Absolutely.
looking big picture. To me, look big picture. When you're in your late 40s, early 50s, buy all your toys. But by then you have so much in the bank, it's a piece of cake. You shouldn't ever be sacrificing your business for your lifestyle.
Napoleon Hill talks about Think and Grow Rich. What he says is that people really start to make real money in their late 40s, even into their 50s, when you start
Mm-hmm.
to really get to peak profitability. So my question is around exit planning, right? So you talked about recurring revenue being in a total addressable market that is growing aggressively, invest in something that's going to be disruptive. So let's say you have all of those things checked off, right? And now you're ready to exit. From your experience, if I'm ready to exit a business, what are a couple key things I need to know as it relates to legal, these investment bankers, making the deal with these other companies that are looking to buy from me?
So the first thing is, who do you want to sell to? Because there's lots of different options out there. And to me, the big thing is you, if possible, want to go in and find single investors or others where there's basically no contingencies or golden handcuffs. Like I go in and a lot of times I've had some of my companies and private equity wants to purchase it. But typically with private equity, they're going to go in and say, okay, I have to stay in the company for at least 5 to 7 years. I can't create any other companies or any other ones. And the money is contingent on the profitability of the company to continue. Well, here's the problem. I know how to grow my expand my business because I'm running it. If I go and sell to a private equity and now they're only going to give me money based on growth and volume, but somebody else is running it, that's insane because I can't control it. And if they crash the plane, I'm going to die in that plane with them. So I'm really sort of about more private investors, or I'm very big about third-party companies. Like you sell to Microsoft, Google, or things like that. They're usually cash deals. They usually want you out of the company because they want to acquire it, and they are going to go in and not give you any contingencies. And maybe there's going to be a 1 or 2 year non-compete on that specific area, but you can absolutely create companies that are non-competing in other areas. So I'm a big fan of, I always like to have at least 15 patents in my patent portfolio. And I never like to put more than 3 to 5 in an individual company. So like right now I have 3 different companies. Each one has 4 patents in it. I'm working on a few more patents now. One of them I'm working on growing. It's about 6 million. The other ones are about 2 million each. And the idea is I'm trying to exit the one at 6 million in the next year. So I want to get that up to about 8 to 9 million because that's sort of the sweet spot. It's right now has a 9x valuation. So we're looking at somewhere around 50, 60. I like to get it to about 75, 80. And I already have some companies interested in purchasing it at about 55. And I'm sort of working with them to say, okay, if we wait a few more months and I get it up to this, I mean, can we get into 75, 80? Because here's the reality. When you're looking at a big company, you're between 50 to 100 mil. That's sort of pennies on the dollar to them. So negotiating up from 60 to 70 to 80 is a huge deal for an individual getting another 12 to 15 mil, but it's really minimal to that company. So to me, if I can get a bid where they're initially giving me above 50, I know I can get them to 75, 80 because it's within that sweet spot of how they negotiate and buy companies.
Yeah, I love that. So, Eric, so what is your experience in terms of growing a company? What is the most important components of growing a company?
To me, probably the most important component is one of my philosophies, customers for life, is really focus on delivering and upselling to your existing customers. I see so many focus on getting new customers and they don't take care of their existing ones. Like you want to see one of the most insane business models is these phone companies where they'll go in and they'll be like, oh, if you're a brand new customer, we'll give you a free phone and we'll go in and give you your first 6 months for free. But I'm an existing customer and I walk in and go, oh, I want a free phone in 6 months. And they're like, no, we'd only do that for new customers. And I'm like, so if I leave and go to a different company, they'll give me a free phone in 6 months, but you won't? And they go, absolutely. And essentially, they're in a negative growth cycle because they're focused so much on new customers. They're not taking advantage of their existing customers and they're all leaving. I mean, what if they gave their existing customers the same deal?
Yeah.
They would have so many more customers. It would be so beneficial, but they so focused on new that they're abusing and losing all their existing. So to me, my number one rule is I am big on numbers. I'm all about data drives decision, not emotions. Everything I do is data driven. I'm looking at existing customers. I look at retention. I look at profitability. I look at margins. I get spreadsheets that basically with graphs. So every part of my business, everything I do, I'm getting graphs weekly and monthly from my team, my accountant, my executives, and I'm tracking if the numbers are going down or flat, we're in an emergency situation. If the numbers are increasing, then we're good. And then I want to see is compared to previous months and previous years, because if I'm increasing, but it's a decline increase from a previous month or a previous year, that's problematic. So everything I do is data driven. I don't want emotions. I don't want people coming in going, well, I think we should do that. I don't really care what you think. What does the data tell me? So it's really data driven, everything I do. And my number one thing is how do I take care of and grow my existing clients first? And then once I'm sort of maxing out the existing customers and they're satisfied and love what we're doing, then and only then do I focus on bringing on new customers. And I bring them on slowly to make sure that I can continue to maintain the existing customer base. Because that's really where your valuation comes in. If you showed that you have customers for 5 years, your valuation is going to be off the chart. If you showed that your actual retention for customers is about 6 months and then you lose them and bring on new ones, your valuation is going to go down so quick.
Yeah, absolutely. Eric, how do you think about product, right? So, like, I'm constantly trying to improve what I'm doing for my clients, evaluating every investment I have, how I structure investments, what else is out there, what we can do better at, and I'm always looking to perfect, call it my product, right? So, how do you think about like perfecting a product, right? To the point where, okay, now I'm really ready to market this because the product is perfect. Or is there such a thing as having a perfect product?
So this might sound a little absurd, and I actually do it backwards. I actually get an idea, get the general concept, figure out what the deliverables are, and then I actually sell the product before it's productized. So I'm actually selling products before they're built and before they're developed. And I bring on customers sort of as beta, where I give them a discount for the first 6 months of whoever I bring on. And then I basically build out the product on the fly. And then once it's built out, I then productize it. And then once it's productized, I scale it. So I'll give you an example. I'm rolling out a new training course right now. It's not built, but guess what? I'm doing calls live with our client where I'm actually building the course material in front of an audience. So it's sort of like sitcoms where I'm basically recording in front of a live studio audience. And then my team takes that, productizes it into a actual course. And then in 6 months, we're going to be selling pre-recordings of my course. And then I'm only going to be doing monthly coaching calls in a group setting. So we're actually building the products on the fly and verifying and validating with live customers. And then once we productize the service, then we do great selling and marketing. So right now we're just doing organic selling of it to get about 20, 30 customers. I'm then going to go live. That's going to basically pay all my costs. So I'm never operating in the red. And then once the course is built, I systemize everything. So everything is written, systemized processes, everything in our business from how we do sales, marketing is systemized. And then in 6 months, once the course is fully built and fully systemized, or what I call productized, then we do massive paid ads, paid marketing, and just blitz from Google PPC to Facebook and LinkedIn ads and paid advertisement. And then we just grow and expand that. And now it's pretty much high profitability and low impact because the product is basically built on the fly.
So every part of the business gets written down and there's a process for everything. So somebody new comes in, an employee, a salesperson, here's the playbook, run with this.
Bingo. And then the big thing is we have metrics and tracking. And I tell everyone who I hire, it's really simple. If you can't follow directions, if you can't follow the playbook, we don't play baseball. I give you one strike and you're out. Because the reality is, I know my playbooks are documented, they're written, they're perfected, and they work if you follow them to a T. If you can't read, if you cut corners, if you don't follow them, you get one warning. And then if you continue to do it, I'm going to fire you because I can't have low quality. I can't have rogue employees. I can't have people that aren't following direction. I don't hire a lot of super expensive high-end employees because I don't need you to think. I just need somebody who can follow directions and follow the playbook. So I invest a lot of time, energy, and effort in creating very detailed playbooks that are super specific. And then I hire people based on personality that can follow directions.
And don't you feel that any business could have that playbook, whether you're a lawyer, whether you do what I do, whether you're a doctor, everything documented with process in place for every minute of the day. So there are no questions. And essentially it tightens things up, which really will help increase profitability, increase sales. And that's ultimately the goal of businesses after taking care of the clients.
Exactly. To me, the number one reason why businesses fail is because people are winging it, making it up, and not consistent. If I know that if I follow this playbook, I have happy customers, I have a consistent process, why wouldn't we follow it with everything? So I think companies need to do a much better job with documentation, discipline, and execution. And this is one that whenever I go anywhere, I always monitor and travel. This is why air travel is so safe. If you talk to an airline pilot, he follows the same checklist, even if he's a 20-year veteran. And if he doesn't follow it, he gets fired. So that's why airline safety is so safe these days, because they have documented playbooks that every pilot must follow. And if you skip a step, you lose your job.
Eric, I want to ask you about culture, right? So culture is a word that's used quite seldom and super important, right? So when you think about culture and the businesses that you run, that you sold, and you're currently running today, how important is culture, and what do you do to enhance culture?
So if I haven't convinced you I'm crazy and insane yet, I will on the answer to this question. So to me, culture is everything. I hire on personality and culture. I do not hire on skill set. I can teach you skill set. Skill set's easy. I can teach you cybersecurity. If you have it, great. It's secondary, but it's all about the culture. So our interview process is we're going to interview you at least 3 times, and it's all about culture. It's all about, this is our expectation. We start work at 8 o'clock. We don't start work at 8:05. You don't show up at 8:10 and tell us you got caught in traffic. You better be ready to go by 8 o'clock. If you want coffee in the morning, if you want any of that, show up at 7:50. But this is our corporate culture. Our core hours are 8 to 5. That's how we operate. That's how we discipline. And there's no exceptions to the rule. If you can't handle that and you're not going to work with that, please don't come to work here. So we're very, very big on really doing hard culture push during it. Then I always go in and I ask them, do you have any vacation time with your current job? Do you sort of have any time off? Can you take a day off here or there? And they're always going to say yes, but it's a setup question. And the reason it's a setup question, I'm like, great, pick a day next week and you're going to mirror me for a day. I'm going to pick you up at 4:30 in the morning. You're going to go to the gym with me. You're then going to go get coffee with me. You're going to go to every meeting with me. You're going to go to every assignment. You're going to sit in on every podcast. You're going to go to any appointments I have. I want you to see how we operate and the standard that I expect from you. And if you can't go and hang with me for an entire day, then you're not going to be a right fit. And it's funny because I would say maybe 30% are like, oh, I'm not going to do that. I'm not getting up at 4:30. Great. You're not going to work here. And then a lot of times by noon, they're like, Eric, this isn't a fit for me. I'm going to check out because I want them to know how I operate. Then I go in and say, okay, great. You passed test 1. The second test is, tell me an afternoon. It can be Saturday. It can be Sunday. It can be Friday. We're going to go play golf together. Now, reason for that is I stink at golf. And I'm purposely, when I go golfing with them, I'm going to be an a-hole. I'm going to go in and as they're swinging, I'm going to start talking to them. I'm going to start hitting into the next group. I'm going to hit into the woods. Because the reality is when you get somebody out of the office, you see their true colors. And if I take them out on a golf course and they start getting frustrated or mad because I'm being a little annoying, well, guess what? Customers can sometimes do those same things. Customers can interrupt your day. And I just want to see how you respond and react in a non-work environment. And once again, I would say 50 to 60% of people fail that test because when you get them out on a golf course and you're starting to just be really annoying and frustrating, their true colors are going to come out. And I mean, I see them get frustrated and angry if they miss a shot. I see them lose their temper. I see them getting annoyed. Eric, you're taking too long here. People behind us are getting upset. I'm like, great. I just saw your true colors. You're not going to be a fit here. I need somebody that's going to be cool under pressure. That's basically going to be, okay, things go wrong. Things don't always go right. And I'm going to stay calm. I'm going to stay collective. And I'm going to ask questions. So to me, we do a very bizarre, rigorous hiring process because I don't really care about your skill set. I care about your culture, your temperament, and whether you'll fit in with our organization.
Yeah, 100%. Eric, where did you learn all this? Did you have a mentor?
To be honest, a lot of it was just getting burnt. Was just really making bad hires, losing lots of money, and just started going and saying, okay, what would be the best way to fix this? And I just try and experiment different things and sort of figure out what works. I'm very big where my life and my business, I call it a laboratory. I'm experimenting and trying out new stuff all the time, seeing what works. And then whatever works, I scale, and whatever works, I throw away and try over again.
When you think about these businesses that you built, selling them, coming into the monies that you have, when you think about wealth management, what I do for a living, right, which is helping people manage their wealth, investing money in various portfolio strategies, financial planning, right? What is your view of wealth management as it relates to your money and how you think of that, or you've thought of that throughout your career?
So to me, the big thing is surround yourself with the best, smartest people in the planet on things that you don't want to do. So to me, I love certain things. So I do a lot of it. Other things I'm not good at. So I hire the best people to do that. I pay a lot for CPAs and accountants because that's not something I want to do. I have a wealth management team where basically I get the data, right? They give me the stats and the tracking, but I let them manage and track my portfolio. So I tell them, these are the returns I want. These are the stocks I want to investment. This is what I don't. And then I hire the best people to basically manage that. I'm not going in and trading or managing stocks. That's not something I am good at, I desire, or I have the time to do. So I just surround myself with the best, smartest people on things I don't want to do. I have a personal chef. I'm huge on fitness. I don't want to cook. I have my own driver because here's the reality. I'm always thinking and analyzing problems. It's not safe for me to drive because I'm not paying attention. I'm thinking about my customers, my clients. And the reality is, if you look at what I bill out and what I charge my driver, it's cheaper to have a driver. It's cheaper to pay somebody $50 to take me 30 minutes, and I could be making tens of thousands of dollars in that. So I don't drive. Yes, I do have sports cars and on the weekend, I love doing that, but that's a very focused area where it's actually a hobby. It's not what I'm doing, but I have a driver that drives me around. I have somebody who takes care of my laundry and my cleaning of the house because I don't want to do those things. Same thing with wealth management. I know the wealth and a growth factor, but I don't want to manage or track it. So I just hire the best people and surround myself with an amazing team. I have a team of it's probably up to about 27 people that are basically responsible for making Eric be able to do what Eric loves to do, which is grow and sell companies. And they take care of everything else that I don't want to do. So it's really understanding what you're good at. This whole thing where people are like, oh, figure out your weaknesses and become good at it. I'm like, heck with that. Figure out your weaknesses and hire somebody who's better and you focus on your strengths. So I'm all about doing what you love and don't try to do things you're not good at.
Absolutely. Love that. Love that, Eric. That's really terrific. Last question for you. So you're a super busy guy, super organized, processes in place, love everything about it. Do you have a work-life balance?
I do, but to me, a work-life balance is a perfect imbalance. Because what I mean by that is this idea that every day I'm going to spend 2 hours on my health, 8 hours on the business, 3 hours on family, and this every single day is not practical. There's things that come up with my family. There's things that come up personally. So to me, it's sort of the pendulum where it's not a seesaw. So I look at balance as a verb, not a noun. So if you look at a seesaw, that's what people think is it should be level. It should be perfectly level, and that's balance in your life. To me, it's pendulum where every ball is swinging back and forth. And balance is when one ball is high, the other ball is low, and vice versa. So, like right now, I'm focusing on growing and expanding my business. I'm sleeping at the office most nights. I'm not going home. I'm putting in 12 to 15 hours. But then guess what? In July, my daughter's in nursing school and she has a small break. So I'm actually going to go to see her for 4 days. I'm not working. Those 4 days, I don't even take my tech out. I'm probably not going to bring a laptop, and I'm going to take off 4 days and be with her 4 days, spending time with her, helping her move, helping her do things, helping her get organized. And during those 4 days, my business is basically running on cruise control. And then vice versa. I'll go on fitness trips on my health and others, where I'll take 3 or 4 days and just focus solely on fitness and not the business. So to me, it's yes, over a year, I have great balance. If you look over a year, I spend a lot of times with my kids. I spend a lot of times on my health. I spend a lot of times on my business, but it's always going to be a perfect imbalance where it's going to be dedicated time. This idea that on a given day, we're going to spend 4 hours here, 3 hours here. The issue is if you think in the evening, after working all day and exercising, you're going to spend time with your family, you're exhausted. It's low quality time. You're not present. I want to go to sleep and my kids are on their phone. So that to me isn't balance. It's, I tell my daughter and my kids, listen, when I go and meet with you, no tech. I have a simple rule that all my friends and all my family know is if we go out to dinner, you leave your cell phone in the car. If you take your cell phone out during dinner, I will leave. Because it's disrespectful, it's rude, and I want to be present with you. I'm not going to have my cell phone with me, so you better not have it with you. And if you can't agree to that, then honestly, I don't want to be your friend and I don't want to go to dinner with you. Because to me, we're so distracted in this day and age that, oh, I have dinner with my family every night. And I go to their house and you and your kids are on your phone and you don't say a single word to everyone. That's not quality time, right? So to me, it's really about imbalance is getting balance. And that's how you get perfection. Have dedicated days for family, dedicated days for business, dedicated days for your health. And then that's to me how I achieve balance. And it works out so much better than trying to do multiple things at the same time.
Oh, that's terrific. Eric, I could literally talk to you for the next two,
I
3 hours.
know. I love talking.
I'm not even joking. No, seriously, I really can. So I'm going to leave it off with, would you like to say anything else as it relates to growing a business, exiting a business that would be helpful to my audience?
The biggest thing I would say is figure out what your purpose in life is, what you love to do, and focus your businesses in those areas. I love my superpower is helping people and making the world a better place. And my domain is cybersecurity. So I have a purpose and a mission in 15 years to basically secure cyberspace. Everything I do is focused on that mission. So if you don't have it, have a 15-year plan of who you want to be, make it align with your purpose and your superpower. And then everything you do should be aligned with moving towards that goal and that target.
Love it, Eric. Listen, thank you so much for your time today, your perspectives. It was really terrific. Thank you very much. And congratulations to all your success.
Oh, my pleasure. And thank you for having me.
All right. Thank you.